Good morning, future CPA! So today, i-discuss natin yung isa sa mga topic na hindi na i-discuss sa undergrad under your subject na AFAR. And this is sales with rights of return. Kasi itong topic na ito ay lumalabas sa board exam pero hindi nga na i-discuss sa undergrad. So, customers have a right to return goods that are faulty or not as described or unfit for purpose. However, even if goods are not faulty, many retailers have a goodwill policy allowing returns within a specified period. May mga ino-order ka online, say for example, nakita mo sa description, maganda yung description, pero nang i-deliver sa'yo, iba naman pala yung nasa description. So, pwede mong i-return yun. Or, may mga seller naman na kahit hindi faulty yung product na na-deliver sa'yo, they still give policy na pwede mong i-return yung products na in-order mo. And the level of these returns can be high, especially where sales are made online, say for example sa Shopee. So first, let us first define right of return. Under IFRS 15, it defines a right to return as a right that enables a customer to receive, number 1, a full or partial refund of any consideration paid. Ibig sabihin, maibabalik sa kanya fully or partially yung binayad niya if na-exercise niya yung return or kapag binalik niya yung item na binili niya. Second, a credit that can be applied against other amounts owed or that will be owed to the vendor by the customer. Meaning, magkakautang sa'yo si seller when you return the goods you order and kapag hindi ka pa nabayaran ni seller and pwede mo yung gamitin or i-apply kung may existing payable ka kay seller. Therefore, ma-offset na lang yung utang mo. Or, a different product and exchange. So, pwede mong ipalit sa other product. Depende sa agreement nyo ni seller or a combination of all of the above. So, yung pinaka-importante under this topic is on how to account for sales with rights of return. So, paragraph B21 of IFRS 15 requires entities to account for sales with a right of return recognizing all of the following. So, according to IFRS, kailangan natin mag-set up ng first, revenue. Ilan ba dapat yung mai-record na revenue? Revenue for the transferred products in the amount of consideration to which the entity expects to be entitled. Therefore, yung revenue natin would not be recognized for the product expected to be returned. Yung revenue natin, i-recognize lang natin for the amount net of the expected return. Say for example, 100% of our sales revenue less 20% of the expected return. Therefore, 80% na lang yung revenue i-recognize natin. Second, set up tayo ng refund liability. Set up a liability for the amount of consideration the entity expects it will have to refund. Ito yung 20% na expected na i-refund mo kay buyer in the future. Third, an asset and corresponding adjustment to cost of sale for its right to recover products from customer on setting the refund liability. Ito yung asset natin na marirecover natin or i-return ni customer. So, yan yung cost of product na marireturn. So, to understand it better, let's look at this example. A retailer has a stated policy that any product may be returned within 30 days to a maximum of 20% of goods purchased. So, si seller daw, nagbibigay siya ng 30 days period para i-return yung goods na binili mo. But for a maximum of 20% only. Therefore, 20% yun yung estimated future return natin. So, on January 1, the retailer introduced a new product with a carrying value of $35 in inventory. Yung $35 na yan, this 35 is our cost per unit of our inventory. The following return patterns occur during the next 3 months. Ito naman yung patterns ng mga returns. Noong January, may 1%, February, 19%, at ng March, 5% yung return. Then, on April 1, ito yun yung transaction. The retailer enters into a new contract and si seller nagbenta ng 150 units of product at a price of 50. Ito yung selling price natin, 50. However, given that product has been newly introduced to the market and there is a large range of possible consideration amount, the retailer is unable to assert that it is highly probable a significant revenue reversal will occur for the variable component. So, sabi daw, hindi ma-assert ni seller kung magre-recognize na ba talaga tayo ng revenue kasi baka wala namang maibalik na goods in the future or hindi kasi baka may ibenta. So, anong gagawin natin? Under IFRS 15, ito yung gagawin natin. Una, compute muna natin yung sales revenue. Sales revenue net of expected future return. Therefore, itong 80% lang na to ang i-record natin sa revenue. Yung 20% sa refund liability natin yon. Therefore, 150,000 units times 80% times 50, yun lang yung revenue natin. $6,000. So, to record the entry, syempre magde-debit tayo ng cash. Ito yung amount total amount na binayad ni buyer. So ito yung total amount na na-receive natin. Then credit sales revenue. Ito, 6,000 lang yung i-record nating revenue kasi yung expected returns is i-record natin as a refund liability. Refund liability natin yun just in case the customer will return the goods in the future. Ano pa yung entry? Siyempre, nagbenta ka. So, mababawasan yung inventory mo and magre-record tayo ng cost of sales. Ilan ba yung cost of sales? Just like sales revenue, yung cost of sales natin dapat naka-net. Net din ng future sales return. So, 150 times 80% lang times 35 na cost equals 4,200. And, ito naman yung asset natin. Yung asset na marireceive natin sa customer o cost of asset na marireceive natin sa customer kapag ni-return nila yung goods. So, yung entry natin, syempre mag-credit tayo ng inventory for the total amount of 5,250. Then, magde-debit tayo ng asset. Yung na-record nating 1,050, ito yung rights natin, right to recover product. Yung part yan ng cost of sales na i-return ni customer in the future just in case. Tapos yung cost of sales natin for the revenue na i-recognized is 4,200. Then, when the 30-day refund period lapses, assuming no returns, walang binalik si customer, anong gagawin natin? First, i-close natin yung refund liability natin. Wala na tayong liability kasi hindi naman binalik ni customer yung goods and magre-recognize na tayo ng revenue. Kaya, debit refund liability and credit sales revenue. Next, yung right. Ito, yung expected cost of asset na marireceive natin since wala namang binalik sa atin, i-close na natin yung rights na yon at i-consider na natin yun as sold. Therefore, magde-debit tayo ng cost of sales. Ganun lang. So, what if when the customer exercise its right of return before May 1? So, mali ang date. Dapat before May 1. So, since binalik ni customer yung item na binili niya, i-refund natin si customer. Therefore, magde-debit na tayo ng refund liability na 1,500 kasi babayaran na natin yan ng cash of 1,500. Ngayon, magde-debit tayo ng inventory. Bakit natin dinebit yung inventory? Kasi ibabalik natin sa inventory yung cost ng goods na ni-return ni customer and i-credit na natin yung asset natin or yung right to the return. So, ganun lang kadali. Tatandaan nyo lang na kapag sa sales with a right of return, dapat naka-net yung revenue, naka-debt yung cost of sales, at magsiset up kayo ng liability account.